Bulls are clinging to support after 2 days of Fed testimony. Here's what you need to know before the bell. As we discussed yesterday, Jerome Powell giving testimony in front of the House Financial Services Committee. Of course, that was following the Senate Banking Committee, talking about the need to hike rates further and again focusing on quelling inflation and slowing economic growth. Interesting comments, of course, coming out, questions talking about does unemployment rising, which is one of the Fed's goals right now, is to raise the unemployment rate to slow demand in the economy. That historically has always led to a recession when that occurs. Is this time going to be different? Maybe. The bulls are certainly hoping so. The markets actually opened down yesterday morning, but rallied back into positive territory by the end of the day, actually clinging right to support right there at the 50-day moving average. Importantly, as we talked about yesterday, that the 100-day moving average is now crossing above the 200-day moving average. So again, this is another kind of bullish technical support that is still firming up within the market. This says that prices have now been rising long enough for this kind of bullish trend to take place within the markets. Again, of course, the 50-day is already above the 200-day as well. So again, just more technical supports for the markets. Yesterday, the market did decline and actually test this uptrend line that we've had really since the October lows of last year and bounced off of that trend line as well. So again, the market continues to test these support levels from a bullish perspective. And again, this really has kind of been a conundrum for investors that are looking for, well, higher interest rates, we're going to have a recession, but stocks continue to do well. In fact, investors continue to pile in some of the most shorted stocks. Yesterday, continuing to see tech stocks rally, leading the charge. Value stocks have been underperforming as of late. And this is all despite the fact, again, that the rhetoric from the Fed is hey, I really want lower prices because that's going to help bring down consumer confidence, but yet consumer confidence continues to improve as well. So it's really been a conundrum for the Fed because these financial conditions is what they are trying to tighten to slow demand within the economy to bring down inflation. But guess what? Investors just have not been listening here. But from an investment standpoint, again, the market continues to not do anything wrong. We've had this retest of support at the 200-day moving average. That was bullish. We then had a rally coming off that 200-day moving average. That was bullish. We're now getting a retest of the 50-day and trend line here. If that holds, that will be bullish. So again, no reason here to be overly bearish in the market short term. Continue to trade accordingly. Watch these technical levels. This really will define whether or not this bull trend continues to have legs. We do have a lot of bullish signals in place. We are not yet on a MACD buy signal, but we are getting close. If we have a weaker employment number on Friday that suggests the Fed may have to pause rate hikes, that could certainly lead to a strong update. We've also got inflation next week, the FOMC meeting coming on the 22nd. Lots of stuff coming ahead for the markets to digest. But again, pay attention to the technical trends right now and continue to invest accordingly. I'm your host, Lance Roberts, and that's what you need to know before the bell.